Hey, what's up guys? Welcome back to the channel. In today's video, we're going to be doing a chart and fundamental update / analysis on XL Fleet stock to see whether or not it's a good buying opportunity at its current valuation. So we'll be looking into the prospects of the business, their earnings report, and at the end, we'll also assess the chart to see what we could see happening with the share price in the short term. Now, this video is actually going to be the very first video in a new series I'll be starting on the channel called StockDives, where I'll be basically providing a much more shortened and simplified analysis of companies that I'm in the process of either actively researching or companies that the community might request for analysis. Now, these might be companies that I don't actually have in my portfolio right now, but I might be considering adding these companies in the short term. And the community maybe wants a third-party opinion on this, and that's exactly what the series is for. And this week, we'll be starting this series off with XL Fleet. Now, for those that might not be familiar with XL Fleet or XL stock, this company essentially provides electrification solutions to fleet customers through essentially upfitting their existing internal combustion trucks with batteries and motors. Now, especially with the current administration, fleets in the US have some major sustainability targets that they have to match. And unfortunately, right now, there really are no economically viable, fully battery electric trucks available on the market that fleets in the utility, even in the commercial, and obviously in the government sector can go out and just buy out straight up. We're talking about fleets that really can't afford to worry about range anxiety or the lack of high-powered charging networks. And that's where XL Fleet business really falls into place. From what I've been studying about this company, their overall business model is actually a very low capital because at the end of the day, they're not building large factories to build their motors and their batteries. And according to XL Fleet's director of marketing, their plug-in hybrid systems, which is right now their highest end offering, can increase the efficiency of their trucks by roughly 50%. And this correlates with a roughly 33% decline in emissions. And I mean, if I'll be honest, these are generally pretty darn good numbers, even though I'm sure the results will vary from truck to truck. This is still really impressive. And this is just the plug-in hybrid system. As you can see, these guys also have this hybrid electric system, which essentially just has a smaller battery, and it's not able to plug into the wall outlet like you would with a regular electric vehicle. Now, going into their most recent earnings report, we can see they actually reported roughly $0.7 million of revenue for the first quarter, which is roughly $700,000. Now, this was actually down from year over year, which was around $1.2 million for the year of 2020. Now, in my opinion, this has to do with not only the fact that there was a lot of supply chain issues with the batteries that these guys do use, but the stay-at-home shift that was generally introduced by COVID-19 was a pretty significant player, in my opinion, in this as well. I mean, if you think about it, starting in March 2020, many companies ended up laying off a huge chunk of their workforce to save costs due to obviously the countrywide lockdown. And a side effect of this, in my opinion, could be that these companies also ended up cutting their budgets for potentially adding vehicles to their fleets, which potentially could have translated to lower demand for electrification solutions from companies like XL. Now, the CEO didn't mention in detail about what exactly caused the drop in revenue in their earnings report, and this is just speculation from my end, but I do think that the pandemic could have played a key part in this drop that XL witnessed for year-over-year revenue. Now, the real interesting thing here is that you can see these guys reported roughly $404 million of cash at the end of Q1, which is actually a really good number for a company that's trading around that $900 million market cap. At $6, the company's only worth $900 million, and half of that value is in terms of cash that the company has. So the company has quite a lot of leverage from this standpoint that they can use to do customer acquisition, to expand the product offering, or obviously to do acquisitions of other businesses. And it's funny because exactly that is what happened during the earnings call. They reported an acquisition of a company called the World Energy Efficiency Services, which is essentially a company that works on the renewable energy and energy storage side of things. It's a roughly $16 million acquisition, which is barely a dent in their total cash position, which is great. And this energy storage acquisition will essentially help these guys with their XL Grid charging infrastructure business, which is a new business they introduced earlier in the year, which is essentially them introducing charging stations for the fleet customers that they are selling their plug-in and hybrid electric solutions to. So essentially, these fleet customers can have the charging infrastructure for their trucks at their office spaces. And this actually plays very well into XL Fleet's growth plan for the next year, which is that they're going to be introducing a third product offering, which is an all-electric solution for their fleet customers. And of course, the more electrification you add to a product, the more demand increases for charging infrastructure. And since since fleets have a centralized location where typically their fleets and trucks come in to dock at the end of the day, they can have a centralized location where they can charge their vehicles overnight. And that's exactly what Xcel is offering with their Xcel Grid power solution system. I think this is a good idea. It's just that they have to execute on this efficiently. And I think this is generally the whole story around Xcel Fleet, is that they have to execute on this really well. Their business is very streamlined, it's very low capital, and they're very highly leveraged, like I said, with that cash position. They barely have any debt on the balance sheet. And I think that is the reason why Wall Street has been pricing the company a little bit lower than some other SPACs. It's because the company has a lot of cash right now, but they aren't able to deploy it immediately. They have to take a couple of months, a couple of quarters, and in some cases, obviously a couple of years to really deploy that capital to prove to Wall Street that, hey, our business model is viable and that we're able to actually become profitable in the very near future. And if that is something they're able to prove, I think Wall Street will give this company a good run for its money. And I think the valuation of the company should increase well over that $1 to even $2 billion market cap mark in the next 2 to 3 years. So we've had a look at the business side and also some of the financial sides for Xcel Fleet. Now let's have a look at the share price of the company and the chart to see what can we expect with the company in the short term. I know I've read the community forums for this company and I've read obviously social media quite a bit. There are quite a lot of people that are holding the stock at pretty high averages, and I generally think this is just an anomaly. To be honest, this kind of sell-off is really significant and it's very uncommon in this industry, especially in the EV industry. It's just unfortunate that I think the fact that this company was a SPAC and the fact that we saw that general market rotation, and I also think a short report came out earlier in the year, those kind of mixed together and tied together to kind of form this really, really sad looking chart, to be honest. And you can see we've saw some pretty high volume selling over the past few months. But as you can see on the chart is starting to form a nice little curve on the bottom. So we are starting to bottom out. It looks like we found a little bit of a support around that $5 mark. I do think this can recover to at least the mid 15s by the end of the year. That is my goal. And I think given their catalyst they've lined up, given the fact that a lot of their revenue is going to be recognized at the end of the year, I think that can set up for a pretty good opportunity. And the risk to reward is really good on this company. Like I said, this company has a bunch of cash on hand. And that means that at the end of the day, they're not highly indebted to anybody. So they can focus on expansion and PR. And I think PR is the key thing that this company is missing, is that they're not able to update their investors as much as a company like in the EV space would be able to, because at the end of the day, they're not developing a factory. They don't have a lot of capital that they need to deploy. So it's a very efficient business. And again, that kind of plays a little bit into the hands of short sellers and obviously bears on this company because they don't have anything that can go against them. And unfortunately for them, in the long-term investing game, it's all about good fundamentals. And I think Xcel Fleet has some pretty decent fundamentals. Now, looking at the chart, let's pull up the MACD here. You can see that the MACD is starting to curl up a little bit. We're seeing a lot more volume coming to the share price, which I think is a good sign. And it could mean that we break out above that 750 level. Now, that 750 level is a very important technical level. I think if we break above that, we can reach that $9 to $10 mark. And obviously that $10 mark is a pretty important resistance level too. So the next target after the $10 mark, in my opinion, would be well into the 13 levels. But so far, this is looking really good. You can also see that the RSI is showing a positive divergence, which means that the RSI is making higher lows when the price action has been making lower lows, which again is a bullish reversal signal. So if the market doesn't really sell off too much, or if there's no more rotation going on, this could be a really good chart for even a potential swing trade. Another interesting thing to note is on the weekly chart, you can see that the chart put in a nice doji reversal candle a couple of days ago. You can see the previous week of the 14th of May, these guys put in this very nice hammer on the chart right at that support level, which is a good sign of a potential reversal. You can see the volume has been increasing and we've put in this very nice candle for the past week. So I think this could be a nice sign of a medium-term reversal. The MACD cross is also coming to the books in the very near future, which again is a great sign. But generally speaking, just looking at the chart, you can see just how aggressively this has sold off. And such aggressive moves to the downside are very short-lived. It's very common to see stuff like this happen in the market. It's forming a pretty nice risk off from that $5 level. I think this can see that $10 level in the next few months if everything goes to plan and if the company is starting to realize some decent revenue from their fleets. And generally speaking, the business model is really, really, really fluent. And I really like the streamlined business model they have. I think this is something I'm going to consider adding to my portfolio in the near future. Again, I recommend you guys check out their website, check out their social medias, and also check out some of their offerings to see, what do you guys think about this company? Do you guys think this is something that's viable in this electrification business? I personally think it is. I think it's a pretty good business model. The more I look into it, the more I learn just how well positioned this company could be for the near term. But again, let me know what you guys think about this company. I hope you guys enjoyed this little episode of the Stock Dives. This is my very first episode, so let me know any feedback, what you guys think I can improve on. But yeah, anyways, I hope you guys enjoyed this. Let me know your thoughts of XL Fleet, and also let me know what other stocks I can cover in this series. I'd be glad to look into other companies as well. But anyways, guys, I hope you guys enjoyed this video, and I'll catch you guys in the next one. Take care.